On this episode of We Asked ChatGPT a very important question. In this episode, our two competitors are SVOL versus JEPI.
So let's start with the question of the day. ChatGPT, would it be better to put $1,000 into JEPI or $1,000 into SVOL?
Investing is an excellent way to grow wealth over time, but with so many options available, it can be challenging to determine which investment is the best choice. In this essay, we will compare two popular investment options, JEPI and SVOL, to determine which one may be a better investment.
Quick commercial break. Do me a favor and put a comment below on how you like to use ChatGPT. Do you trust it for the future? Do you use it to improve your current job? I'd like to know your answer. I plan to use it like an assistant and see ways it can help me. I'm new to using it, so I'm curious to see what it says. I think it will talk about three things. I think it will talk about the difference in the dividends. I think it will talk about the type of investments that make up the portfolio. I also think it may talk about price appreciation difference before, during, and after the pandemic. Alright, let's get back to it. Feel free to leave a like and a comment and maybe even a subscription. Us small YouTube channels need the love.
JEPI is an exchange-traded fund, ETF, that tracks the performance of U.S. companies with high exposure to the real estate industry. JEPI seeks to provide investors with a low-cost way to invest in real estate without the high fees typically associated with direct real estate investments. On the other hand, SVOL is an ETF that tracks the performance of companies in the global technology sector, including companies involved in software, hardware, and IT services. Both JEPI and SVOL are attractive investment options, but they differ in terms of risk.
Hobo comment: I think ChatGPT got it wrong here. JEPI is an ETF but not for real estate. Instead of focusing on real estate as Chat said, it instead looks at the top 500 companies of the S&P 500. The information on SVOL also doesn't sound all that correct either, but let's see what else it said.
When it comes to investing, risk is an essential factor to consider. JEPI is a real estate ETF, which means it is tied to the performance of the real estate industry. The real estate industry can be volatile, as it is subject to economic and market conditions. Additionally, the real estate industry can be heavily influenced by interest rates, as changes in interest rates can impact the demand for real estate. SVOL, on the other hand, is a technology ETF, which means it is tied to the performance of the technology industry. The technology industry is known for being volatile, as it is subject to rapid changes and disruptions. However, the technology industry has shown strong growth in recent years, and many investors see it as a promising investment opportunity. As you can see from the section to the left, JEPI's top 10 holdings are closer to 17% of the entire portfolio, and they are all over the place. Lots of diversity and protection built in. I believe JP Morgan does dabble in mortgage loans, and I think that's where that information comes from. If nothing else, this is a great example of not fully trusting anything ChatGPT said. When it comes to performance, JEPI and SVOL have had different trajectories in recent years. JEPI experienced significant declines in 2020 due to the COVID-19 pandemic, but has since rebounded in 2021. SVOL, on the other hand, experienced significant growth in 2020 due to the pandemic, as more people turned to technology to work and communicate remotely. SVOL has continued to show strong performance in 2021. So, which investment option is better? Ultimately, it depends on your investment goals, risk tolerance, and overall investment strategy. JEPI may be a good option for investors who are looking for a relatively stable, long-term investment in real estate. SVOL, on the other hand, may be a good option for investors who are comfortable with the volatility of the technology industry and are looking for high potential returns. In conclusion, both JEPI and SVOL are attractive investment options, but they have different risk profiles, return potential, and performance histories. As with any investment, it's important to do your research, understand your investment goals, and consult with a financial advisor before making any investment decisions. At the end of the day, both are decent-looking options based on their current portfolios and the current dividends. Not financial advice, but it wouldn't hurt to have both of these in your personal retirement accounts. Whether taxed or not, these can both good options. Looking to invest in stocks that pay high dividends? Look no further than Dividend Stocks Online. Top Dividends provides valuable information and resources for investors of all levels, including real-time stock quotes, market news, and analysis. Check the link below. Plus, with their easy-to-use platform, you can quickly find and compare dividend-paying stocks to help build your portfolio. Don't miss out on the opportunity to invest in companies that reward their shareholders. Click now to visit Dividend Stocks Online and start your journey to financial success.